All right, finally, episode 4. It is now time to get into the strategy that actually makes me money. All right, in the previous video, we went over how to find these key levels. Now we're going to go into analyzing the chart and trying to determine what move might come next on the chart. So we are sitting here looking at the SPY hourly chart still, and there's several things that could happen come the next day in the market. The very first one I would be looking for is a break above the 73,815 key level, and then a pullback to that level for the creation of a higher low and the continuation of the trend going long. And so what we would look for is break above, pull back, and then getting long. And we would set up our trade for something like this, right? Stop loss below the low of the higher low, and then just target 1 to 2, 1 to 3, something like that. And that would be the easiest, most straightforward trade that we were looking for. Now, why would we not want to just trade the immediate breakout? Well, the reason being is because if the chart is going to turn around and the trend is going to change, most likely the way it will happen is by breaking out above, then coming back down, creating a lower, and then create a lower high back into the range, coming back down. That would be the most likely path if the trend was going to change. And that is why we don't want to just simply trade the breakout. In fact, if this were to happen, that would be a good setup for a short trade. And the reason it's done like that is because when these institutions are deciding that they want to change the trend or take some profits, they need liquidity. So they're going to get as many people to go long as they possibly can so that they can go short and sell their positions. And this is how we watch out for that type of thing. So the second pattern I'm showing you is called a failure pattern. Okay. What other options are there for how this chart could move? Well, the other option would be price pulls back to this level, 735, probably looks below it real quick, trying to get some people to open short positions, thinking that it's going to pull back, then pops right back up above, gives a lower high or a higher low back above the 735 level. And then in that situation, we would target the equal high of 738, getting long something like this, right? Stop loss being below the higher, down here somewhere, just below the higher low, targeting equal highs, risk reward ratio of like 1.7. All right, so those are the like 3 major setups I would be looking for going forward on this chart on the next day of trading. The other possibility which could happen is just a bounce range. Price just kind of ranges in this level and consolidates. I don't typically trade anything like that. Other options over probably a period of more than a day, which would set us up for a nice trade, would be if price pulls back and we get like a lower high below that 732 level, then we're probably looking for the gap to fill. We'll go to the hourly chart so you can see it a little more up close. But something like this, if price were to pull back, give a lower high below this 730.50 level, then at that point we're almost certainly looking for this gap to fill at minimum. And once that gap fills, whenever any gap fills, whether it's the same day or a different day, the base case that we're always looking for, what's going to happen more often than does not happen, is after that gap fills, then the buyers are going to step back in and we're going to get some type of reversal pattern, might look like this, an inverted head and shoulders. And then a higher low would form on the daily chart. And we would be looking really at this point for this to be the higher low in the trend on the daily chart, targeting back towards all-time highs. And you could potentially set up a huge trade on that. The one other spot you could get involved if that higher low did form is you'll probably get a higher low back into the range and you can get long. Sorry, I'm having trouble with my arrow ending where it's supposed to end. All right. So you could get a higher low back inside of the range after price reversed and get long something like this, right? Back to the equal highs. So those would be the main setups that we would be looking for going forward on these charts. We're always looking for a higher low above or a lower high below in order to get involved. Now, if we look at this price action, why, let's say price did this. Why would I not want to get short on that trade? I would say the reason I would not get short on that trade with a lower high below 735 is this is very clearly in an uptrend. So I don't want to be getting short until I see some clear sign that we're actually going to pull back for a deep pullback on the daily chart. And if it's just pulling back into this previous price action, buyers could step it in and pull it back up at any given moment. And I don't see a short being justified until we're at least below the stack. And then we have the thin structure to retrace to the left-hand side. So whenever there's thin structure, trouble getting rid of the arrow. Whenever there's thin structure like this or open gaps, it typically means that price moved up very quickly. And whenever that happens, it can also be retraced back to the downside super quickly. So that's the type of stuff I'm looking to trade. I'm not looking for trades, especially counter trend, inside of an area where price ranged for a while, because there's less certainty in something like that. Now, once again, I would consider the short if it broke into the all-time high, caught people going long on the break, came back into range, gave a lower high back into range, then sure, I'll absolutely consider a short to at least the next level being 735. And again, my risk on that would look something like that. Probably enter as soon as I saw it was a lower high, putting my risk down there, something like that. And then I have a nice 1-to-2 risk reward ratio. As I mentioned in previous videos, I only enter trades on key levels with interactions of key levels. At no other time will I consider a trade. So that's the basic structure of how that would work. Let's go over to the IWM chart that in the previous video we charted out. So we'll go to the daily chart. What we're looking for on this chart is we have these previous flat top highs right here. And we're probably looking for, I feel like I missed a level that I should have added as I look at this chart, but there's a pretty strong level right there that I missed on the daily chart. But what we're looking for on this chart let's zoom out a little further and get a better view of what's been happening on this chart. So it came up, it gapped up, gave us new all-time highs, then pulled back to that previous all-time high, created a higher low to go long. So the next logical structure for this trend to take in a trend count is we would be looking for price to pull back to this previous flat top to continue the trend in the upward direction. So if we can catch any pullback to this 278.15 level, we absolutely want to get that. So that's what we're looking for on the daily chart. Let's go to the hourly. So on the hourly, 278.15, we were looking for pullbacks to here. So on the hourly, if it were to pull back to there, what would it look like? Well, price would break down here. We would get a lower high below 281.53. Then it would come down to this level at 280. And if it was going to pull back, then we would get a lower high below 280. And it would pull back to this 278.15. Our buyer's going to step it up right at 278.15. It's usually not perfect like that. Usually what we'll see is a break actually below the level, comes back up, then gives a higher low above the level, creating, as you can see, the inverted head and shoulders pattern, and continues back to the upside as such. And what we want to do is we want to catch longs off of higher lows above these key levels. And eventually we would think that it would come back to the all-time high. And that would probably be my target from any higher low below. Now, whenever there is a new all-time high, something we might be looking for, if I go back to the daily chart, we might be looking for any like bouts of consolidation below the all-time high. The more consolidation, the better, the stronger this level becomes at the all-time high. And then if and when it does break above that level and give us a higher low above the all-time high, that is always a trade I want to take and get long on, looking for new all-time highs. I'm always interested in taking that trade. Has a really high success rate whenever that happens. And again, the longer it consolidates beneath and creates that strong level, the stronger that trade becomes when it does happen. Now, let's say, what would it look like if we were going to get a trend change? We'd probably get a breakout above all-time high, lower high back into range, and it would come down to this level. If it broke through, gave us a lower high below, then we know at that point we have a major trend change on our hands because we now have lower highs and lower lows on the daily chart. So at that point, we'd be looking for shorts instead of longs. And we'd probably be looking for setups to come down and start filling these gaps below. Any lower highs into the gaps, we'd probably want to try and catch the gap fill trades. So that is how that structure works. This takes a lot of practice over time, a lot of, just continuing to watch trends and how they work. I do typically post trade ideas on X and Facebook. You could absolutely look through those ideas, then look at your own charts and see how I arrived at those conclusions of trade ideas. But this is the basic of how we catch trends or catch breaks and retests of key levels to continue with trends. I absolutely have more trading strategies that I use and will come in future videos.